Assalamualaikum and selamat sejahtera to Dr. Zunarni. We are from Group 11 and my name is Nurfaiza binti Ruspandi, metric number 285128. I will start the presentation by answering the question 1. The background of this case involves a dispute between Bank Pembangunan Malaysia Berhad, the plaintiff, and Ibu Kota Realty Sendirian Berhad and Loh Chiat Hong, the defendants, over outstanding amounts owed under various facilities. The plaintiff filed an application for summary judgment against the defendants, seeking to recover the unpaid amounts. The defendants raised issues regarding the existence of a court judgment obtained against them and dispute the terms and conditions of the agreements. However, the court found that the defendants' conduct, including their silence for an extended period of time, led the plaintiff to believe that there was no challenge to the accounts or legal relationship. Ultimately, the court concluded that the defendants' issues were irrelevant, ineffective, and inconsistent with the documents and previous conduct. Summary judgment was granted in favor of the plaintiff. In this case, there were two types of facilities involved. The first facility was a term loan facility. The principal amount of the loan was to be repaid in monthly installments over a specified period. The second facility consisted of both term loan facilities and revolving credit facilities. The purpose of these two facilities was to finance the purchase of raw materials related to a project. These facilities provided the defendants with access to funds for their business operations with different repayment structures and purposes. Other than that, in this case, there were several types of securities provided by the defendants. Firstly, corporate guarantee. The defendants provided a corporate guarantee in favor of the plaintiff. This guarantee stated that the defendants would be liable for any amounts due and payable to the plaintiff under the facilities. Secondly, debenture. The defendants executed a debenture in favor of the plaintiff. This debenture created a fixed and floating charge over the assets of the defendants. It served as security for the repayment of the facilities provided by the plaintiff. The defendants also provided a legal charge over a property as security. This legal charge created a charge over the property in favor of the plaintiff. It served as additional security for the repayments of the facilities. They provided the plaintiff with rights and remedies in the event of default or non-payment.
A very good day to madams. My name is Lojifa. My metric number is 27955. So I will talk about the question 2, which is what were the issue that were raised by the defendants. So the first issue raised by the defendants is regarding to the notice of demand and notice of termination, where they argue that PA failed to explain the principles, methods of computation, and the eco-threat. However, since these notices were sent to the borrower and not the defendants, it is not necessary for them to include such specific information for them. So the defendants still immediately contest the notice, which hinders their ability to dispute the claim amount. The second issue was raised by the defendants is that they were not notified of the eco-threat change and did not give their consents. However, the eco-threat was previously communicated to the borrowers and not the defendants, so its subsequent negotiations were not required after the facilities were terminated. The defendants cannot contest the terms and conditions agreed upon between P and the borrower. So the third and fourth issue raised by the defendants was regarding the allocation of liabilities to other securities, and the impact of the receiver and manager appointments have been abandoned. The defendants' liability as principal debtors under the facility eliminates the need for allocation based on others' security. The guarantees provided by the defendants are additional securities that remain unaffected. The plaintiff not required to exhaust all other remedies before enforcing the guarantee. So overall, the court found that defendants' arguments on this issue to be unarguable based on the facts and arguments between the parties.
Hello and Assalamualaikum. My name is Siti Sarah with metric number 280814, and I will be presenting about the question 3. So, according to the evidence, it seems that the plaintiff has the legal rights to pursue the guarantee that the defendant provided after the credit facility went into default. Because its inability to meet demand, the company Ibu Kota Datai Ayam Pride Senja Berhad has fallen behind on payment to both first and the second facilities. The defendant and the borrower did not object to or raise any issues with the notice of claims and termination that was set. The first loan facility, a term loan facility with a maximum borrowing capacity of 75 million, is referred to as the first facility in the following. At the end of January 2017, the borrower owed the first and second facilities a combined amount of 128 million according to the information that was provided. The notice of demand that was mentioned above was not disputed or challenged by the borrower, and the borrower failed to comply with it. Following that, a notice of termination date May 16, 2017 was given by peace solicitors to the borrower. This notice demand from termination of both facilities in addition to payment of the total outstanding balance within 40 days of the notification date. The borrower had immediate access to the monies according to the notice as well. The plaintiff was successful in getting a ruling against the borrower and Long Can Chon, one of the jurors at the Court of Appeal. This judgment includes the entire amount still owing as well as the applicable interest rate. The judgment was nonetheless issued against the same defendant, LKC, despite one of the defendants asserting in an affidavit that it did not. As a result, the plaintiff has the legal rights to enforce the guarantee against the defendant in order to recover the balance of the loan that is still owing as a result of the default of the credit facilities and the existence of the guarantee agreement. However, it is crucial to remember that legal matters can be extremely complex, and the final determination of right and the methods by which they will be enforced will depend on the specific law and regulation of the relevant jurisdiction as well as the specific of the case. So that's all from me. Thank you.
Pavitra, and my matrix number is 279755. Today I'll be answering question number 4. In my opinion, I think that the defendants have the rights to content plaintiff. This is because there are basic regulations set by Central Bank of Malaysia about consent information. According to Section 97 of the Central Bank of Malaysia Act 2009, the financial institution must make sure that the consumers are given precise and straightforward information on the terms and conditions of credit facilities or loan agreements. For an example, bank have to give information about the changes in interest rates, cost and repayment plans to the consumers. Other than this section also requires the financial institution to keep their customers' information confidentially. So whoever found to violate this section 97, they would have prosecuted without hesitation by Bank Negara Malaysia. So from this, I can say that if the defendants have the rights to content plaintiff if they never get enough information from the financial institution. So besides this, revised rate framework has been introduced by the central bank where all the commercial bank has to follow from 1st August 2022. Standardized base rate is the new introduction to this regulatory framework as it acts as a reference interest rate in Malaysia for a variety of financial transactions such as loans and deposits. So since the SBR is equal for all the banks, the only difference is that the spread change of individual banks on the lending rates. So therefore, Bank Negara Malaysia requires all the banks to notify their borrowers of any changes to their loan installment amount at least 7 calendar days before the new amount is due for payment. So therefore, I think defendants have the right to argue with the plaintiff if they are not notified with the changes. However, based on this case study, the defendants do not have the right to argue with the plaintiff because they have already agreed with all the terms and conditions stated in the guarantee executed by D1 and D2. For an example, guarantee executed for the first facility stated that various changes may occur in relation to the term loan facility agreement between the borrower and the bank. Since they have agreed to this term, they have no rights to argue. That's all from me. Thank you.
Assalamualaikum and selamat sejahtera. My name is Nur Syafiqah binti Zaini and my metric number is 284484. I will make a presentation by answering question 5. So the question is, what types of guarantee for dependent 1 and dependent 2 and their liability as principal debtor? Dependent 1 and dependent 2 guarantee two separate facilities. They agreed to be liable for the full amount of the guarantee sum as a principal debtor, not just as surety. Their liability as guarantor are not affected by any change or variation to the facility. For a better understanding, I will discuss more about this point. Dependent 1 guarantee the first facility. They agreed to be liable for the full amount of the guarantee sum as a principal debtor, not just as surety. This means that they are responsible for repaying the debt as the borrower. For example, if the borrower asks for extension of the loan, dependent 1 still be liable for the full amount of the guarantee sum. Moving on to the next point, dependent 2 guarantee both the first facility and the second facility. For the first facility, they agreed to be liable for the full amount of the guarantee sum as a principal debtor. For the second facility, dependent 2 agree that they will not be released by any variation, exchange, renewal, or modification of any security or instrument, whether satisfied by payment or not. This means that even if the borrower pays off the debt, dependent 2 will still be liable for the full amount of the guarantee sum if there are any change of the security or instrument. So, in conclusion, both dependent 1 and dependent 2 agreed to be liable for the full amount of the guarantee sum as a principal debtor. Their liability as guarantor are not affected by any change or variation to the facility. That's all from our group. Thank you.